Hey RT family, Ryan Reynolds here with Keller Williams Consultants Realty with your May 2023 real estate market update. So what's going on in May of 2023? Well, what's going on is we've got a new banner behind me, I've got a new t-shirt on, and we're actually part of a new community at Keller Williams called the Planning Community, or the Real Estate Planner Community. What is that, you might ask? Well, the Real Estate Planning Community is is focused on having agents who are trained in and can help their clients to build, protect, and transfer wealth generationally. Now, I'm going to get into the details in a future video, but just suffice it to know that if you have real estate, we can probably help you to do those three things. So let's go ahead and get into the other meat of today's video. And that meat is talking about pricing. So one of the questions I get more often than any other thing is about pricing. So is my house value going up or is my house value going down? So I'm going to focus this whole video on that. And first we're going to talk about the greater Columbus area and talk about what pricing is doing in general. And then we're going to focus in on some specific areas and talk about what prices is doing in Delaware or in Dublin or in Westerville. So let's go ahead and get into that now. So let's talk about the greater Columbus market. Well, many of you have heard that pricing has been coming down for a long time. And so that most of the time is coming from a national news standpoint. But one of the things I can bring to that in terms of data is that our pricing here in the greater Columbus area bottomed in January of 2023. And since then it's been going up. So you can see from this graph that I put up on the screen that last year pricing peaked out at $347,000 for the average house in the greater Columbus area, and that it then went down starting in about July and bottomed at $285,000 in January of 2023. Now these are average numbers, so in some respect they're not real indicative of any particular house, but just the whole market and what the market was doing. So maybe what that means is that the pricing of an individual house didn't necessarily come down. However, the buyers were tending to buy less expensive homes, thereby bringing the average down. But either way you look at it, we bottomed in January of 2023 and have been going up ever since. So this next thing we want to look at is the inventory in the market. If we look at the number of months of inventory, you can tell from this chart that last month we were at 0.7, and the data hasn't actually come out yet for this past April, but I suspect that it's about the same or maybe a little bit up. We didn't have the number of listings in April that I would have expected because I think a lot of sellers are hesitating based on interest rates being so high. And actually, the volume of buyers out there probably went down as well because of the interest rates being high as well. But anyway, we're around 0.7. I'm going to guess we're going to go up to 0.8 or 0.9 for April at the end of April. And what that means is we're still in a very strong seller's market because a balanced market is somewhere between 4 and 6 months. So knowing all of that information, what does that mean? Well, the Federal Reserve just recently raised interest rates again, and so a lot of economists are predicting that we're going to be going into a mild recession sometime in the fourth quarter. But what does that mean for house prices? Well, interestingly enough, if you look at this graph from the last 6 recessions, there's only been 2 times when the pricing has gone down for homes. And that was in 2008 when we had the housing crisis, and back in then 1991, which if you're old enough to remember that, it only went down 1.9%. So that's almost negligible when you think about it. Every other recession we've had, the pricing has gone up. Just understand that even if we do go into recession, that doesn't mean that pricing is coming down for homes. In fact, with all the technological investment in our region with Intel and with Honda, and now with Google building another $2 billion data center, I suspect that our pricing here is going to continue to go up, and we're probably going to go up faster than we have in the past. Okay, so let's go ahead and dig into some of these individual areas and look at what's going on, at least the numbers. I'm not sure if we can speculate on why things are happening, but we're going to go ahead and at least just talk about the numbers. So the first one we're going to talk about is Dublin. So Dublin is a pretty typical strong real estate market, and last year the average sale price was $552,053. This year the average sale price was $562,086. Now that represents about a 1% increase for the people who own homes in Dublin, or at least the average home that's selling, or the average price of the home that are selling in Dublin. And so that's pretty strong. I mean, if you look at West bottoming in January, it coming back up in last couple of months, we're ahead of where we were last year, and so it's probably better than I can say for my stock portfolio. All right, so that's Dublin. So let's move over a little bit to the east and let's talk about let's go to Westerville. So Westerville last year, the average sale price was $447,141, and this year it's $434,607. And that actually represents a 2% decline. So if we think about Westerville, why would the average price in Westerville have gone down? There are some less expensive areas of Westerville, and maybe the more of those are selling more quickly than the other areas. And so that's bringing the average down. I'm not real sure, but that actually went down about 2%. And then the one area that went down the most, actually, from a percentage-wise basis, is Worthington, right in the middle. So they were at 470,055 last year, and this year they're at 428,630. Now 8% down is probably wrong in terms of looking at what the average house has done in Worthington. In fact, Worthington is a very highly sought after area, and my guess is a lot of those more expensive homes are not on the market, and that's probably why the average has come down. So those are some of the towns that are really closer to Columbus, and now I'm going to kind of jump out and look at the ones that are a little bit farther out. So we're going to start at Marysville. So Marysville, if you look at the average price point in Marysville last year, it was $324,235, and this year it's $356,054, and that represents a 9% increase year over year. Now those actual dollars are much lower than the homes that are in closer to Columbus. However, the percentage increase is pretty high, and so that's pretty interesting. Next, we're going to jump over to Delaware. Delaware last year was at $436,302, and this year at $486,919. That represents an 11% increase in pricing. Now, this is starting to be consistent. The farther out we are from Columbus, the more percentage increase. Now, but the dollar amount's still not quite as high as it is down in Columbus. And so that's probably because of all the new construction. If you look at Delaware or Marysville, for sure, there's new construction everywhere, and that probably is influencing those average prices. So the last one we want to look at is Sunbury. And Sunbury is our winner at 14% increase. I'll just tell you right off the top. The pricing went from $444,502 up to $507,163. So that's a huge increase year over year. And so that's also got to be due to a lot of new construction, but it's also very close to where Intel is going to be built, and also where the interstate is in terms of 71 going through, so it's a little easier access. So that's what's going on in specific towns and areas around the greater Columbus area. I think the moral of the story is that the homes that are more expensive are not going up maybe quite as much, that are even closer to downtown Columbus. The homes that are on the outskirts are actually going up higher percentage, but they're worth less to start with, so the percentage might actually be a little bit skewing. What does that mean for you? Well, it really doesn't mean anything, because we really would need to make a specific plan and assessment of your house. If you're thinking about making a move this year, give us a call. We'll come out, we'll do a walkthrough with you. We're going to help you understand what your current home value is and what your options would be to either trade up, trade down, or trade into something else. So that's what we have for this month. I'm Ryan Reynolds, and as always, it's the Ryan Reynolds team, unlimited opportunities and exceptional experiences.